All right, welcome everybody. Wall Street Jesus on a Saturday sweep series, open to everybody today. So I got to remember that. Um, Keep things more on the simple side. Um, some terminology and stuff that some of you who aren't members may not be totally familiar with. I mean, I can confuse members who have been with us for months, let alone somebody who's fairly new to all this. Um, but yeah, we got some interesting stuff to talk about. The majority of the summer has been and more than not, we've talked about this numerous times. More than not, summer trading, you're gonna have to deal with this. There's nothing you can do. Sometimes you get lucky and maybe a market bottoms initially at the start of the summer and you get that light volume, but nice action out there. But more than not, the summer, you got pockets where you can trade early morning, sometimes late day. To be honest, we hardly even see an uptick anymore late in the day. But early mornings where the action's at, and you got to try to avoid getting stuck into that lunchtime hour, because we call it the hour of death. We've been putting that label on it. But anyway, the good thing is we're almost done here. All right, we're halfway through August, more than halfway through August. Things we were talking about this in the steam room last week. Things look like they're pretty close to a boiling point in the marketplace, where there could be maybe an uptick in volatility. We're going into that dreadful September month, by far the worst month you could possibly be on the long side in. A lot of volatility, but we'll see what happens. The one thing that's really fascinating in this market, I consider it annoying. I'm sure a lot of you do as well, especially you have to deal with it in the summer. The divergences out there in the market, the disparity between certain sectors, certain groups is disgusting. It's almost out of hand now. You literally have the SPY, Qs. You pull up a chart on the Qs, right? And you say to yourself, wow, the smart tech is looking good here, right? Before you look at any names or anything like that, you pull up the Qs and you're saying, there's got to be some good looking setups out there, right? We're testing highs, we're, a little bit of a resistance, some nice consolidation. Every little bit of selling gets bought right up. And then you start looking under the hood at the individual names, and you got some things out there getting their rear end kicked, you know? Um, and it's just sloppy. That's sloppy. If you want to make a play on tech, you don't want the disparity to look, you don't want Apple to look like this, right? And then you got a Facebook looking like this, right? A Netflix that can't find a bid looking like this. And granted, I think all these names should get their rear end kicked. I mean, Netflix was up, we were talking about that for months, it felt like. Netflix up over 100%. Not talking about a $2 stock here. But again, it's not, everything's not cut from the same cloth, and I think things as a whole should clear up now, meaning if tech is going to be out of favor and tech needs to consolidate because it's been so strong, it should be the case for the majority of tech, and if they rotate into, let's say the biotech sector or the financials, they will, as a sector, look good. Okay. But we're going to see more of that, I think, and things clear up as we get out of the summer, and that gap starts to get closer in between the names and groups. But that's the problem now, right? And I'm sure a lot of you feel the same way. Like you look at SPY, like look at where we are here, right? We're like, if you tell me what the leaders of this market are right now, and you pull up a chart, of leaders in different sectors, and they look awful. All right, and let's say, all right, you say S&P 500. Let's see some of the industrial names, Caterpillar all the way down there, right? You go to the tech names like we just rattled through. Yeah, you got some of them getting some nice haircuts out there. The industrials. There's that lack of even the financials. Okay, the financials are strong, and the financials have come back here, but it's not like look at them like Morgan Stanley. Does that look bullish to you? You know what I mean? Granted, J.P. Morgan looks a lot better, but you see the difference. There shouldn't be that big of a difference, and I think that's going to clear up. We weren't seeing that big of a disparity prior to that. And yeah, like you guys are saying, healthcare, that's what they've been doing. Like, think about this too. Remember how much they hated like the staple names and the healthcare names, and then all of a sudden now, you're right. Look at the moves on these things from the dead here. Okay, so I think we got to start trying to use that to our advantage. And the good thing is, we saw some signs of that happening Friday, and we'll get into that right quick. And what I'm talking about here, you want to at least start looking at them. Okay, you don't have to run to buy them. If you're looking to buy blood, there's no reason to go all in at one level and think you're going to take the exact bottom there. If you're looking to buy blood, you're looking for that bigger move. Okay, so you want to take it nice and easy. You want to see a bottoming process. You want to possibly leg in. I see a lot of people out there on playing the option side, trying to catch that big move in front month stuff. You need time. Okay, you need time, especially in this type of market. You need time, because it's almost like they go through a period of selling where it looks like they're going to take things down to zero. And then all of a sudden they find a bottom, right? And they start grinding higher without you even knowing and realizing. And then by the time you look, you got a J&J, which now if you want to buy it, you're chasing. Okay, so you have to have your eyeballs on these things before it gets too late. All right, so we saw some signs Friday of groups and sectors that have just been annihilated, and it would make sense for them to at least attempt the squeeze with what's going on right now. Okay, you have the emerging markets in China. I'm sure you all know about it. Everyone's talking about it by now. That have just been, you're talking about borderline crash in some of this stuff. Okay, we know they're in bear market territory, but you're talking borderline crash in some of this stuff. All right, and we had on Friday, prior to Friday, we had some interesting action where like EEM just all of a sudden out of nowhere caught a wave of aggressive activity. You start thinking, all right, maybe they're looking for a squeeze there. And then Friday we had the news and chatter off the Chinese coming in, meeting with Trump, right? That was the initial news. And then now they're going to start to get a game plan together with a set date in mind, okay, November, where they want to try to find a deal by. All right. You may look at that headline as a whole and say, what does that mean? We still have no idea what the hell's going on here, but it might be enough to create a squeeze here. Okay, at least maybe until up to the date the Chinese actually come here, land, and you'll have a Trump tweet, oh, talks went great, blah, 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 that sort of thing. Right? It's almost the same playbook over and over. So we may see that possible short covering and then ignite even possibly a stronger squeeze. Okay, but at least that short covering. We saw Friday, whether it's shorts looking to protect their rear ends against a squeeze, or just speculators looking to, hop on the momentum on the long side here and possibly catch a squeeze. It doesn't matter. right? If shorts are aggressively trying to protect their short positions via buying calls, if they're doing that aggressively, that's still likely to create decent momentum. That could still end up, if they do it aggressively enough, they could still end up leading to a really nice squeeze. Sometimes those rallies, a lot of times, they're better than bull market trend rallies because they're vicious, they happen quick, you know? So I think those are the spots we need to look at going into next week, just because of what we saw late day Friday. Okay. Now, two things. When I see that, one, I want to see that aggressive nature behind the activity. Okay. And granted, it was spec action. We're going to look at the action. You guys can see what I'm talking about. It's not like there were, as I like to call them, those sharp bull missiles flying all over the place. It was aggressive spec activity in some of the Asian ETF space, emerging market ETF space, and some names here and there, the Caterpillar, stuff like that, caught algo action and, on the call side. But usually that could be the start of, potentially them coming in with some decent size. I don't want to predict the future, but we should have our eyeballs on that anyway as we go into next week. And like I said, we're going to look at that action so you know exactly what I'm talking about. All right. And here's where things could get tricky. Okay. And I saw it in the steam room, in the trading room Friday. When the market's healthy and you see buying coming in aggressively, okay, you can automatically come to the assumption, all right, I want to get long some of the leaders that possibly have pulled back here, right? Some of the better names out there have been waiting for a pullback. I want to get long that stuff. And this is what I mean about this market. Here's where you can run into trouble, okay? Because you can very, very easily see a scenario. It may not play out like this, but I wouldn't be shocked if it does, where they squeeze some of the Asia stuff, okay? They squeeze possibly some of the Caterpillar stuff that they've been leaning on because of the tariffs, all right? And they leave tech or some of the tech behind, right? It can't shock us at this point. Maybe IWM underperforms if that takes place. So, like I said, that's where this market creates a big problem here, and we got no choice but to deal with it. So I stress, be vigilant. When you see action coming into a particular sector, make sure if you're interested, you're looking to play on that sector, on those names. Don't automatically assume, like you normally would, that there's buying coming into the market. I could just get long anything in the market right now, and I'm going to participate. All right. So I just want to give that heads up. And I could be wrong. You know what I mean? And the reason I'm bringing that up is because I saw some people talking about IWM Friday. And I just, I put two and two together and I said, well, small caps were outperforming when they were selling all these tariff related issues nonstop. What happens if now maybe small caps underperform for a short period of time and money goes back into these tariff names that have been beaten over the head? So just keep an eye out for that. All right. Here's some of the action that I'm referring to here. And we'll get into the sentiment stuff. I just want to touch on quite a few things. We'll go over some of the Friday activity aside from the Asia setup and all. All right, so here's the three main ETFs that caught action. FXI, okay? I've seen bigger action. I've seen better action. FXI, like I said, we know how much selling has been there. We saw the headline. You see the action. Potentially can light a match here for a squeeze. This was the top order of the bunch. Those of you who are on private Twitter in the room know how aggressive the whole latter part of that afternoon. It was the only action. You know, this started up the whole action late day. Other than that, Friday was a dead issue. But September 43 calls, also September 42 calls. You could see decent volume there. Next week, 41 and a halves, and they were just making a play on the rest of the afternoon there. All right, and these things got hot. These things got hot on an intraday basis. Yeah, look. See, so that's why in these markets, guys, I don't like to do too much on the position size because on the swing trade side of things because of exactly what I just had a rant about in regards to the market, the health of the market, and all that stuff. Now I want to try to be really picky with what I'm swinging because these things switch so quickly. But these intraday moves are tradable if you wait around for them and look for this type action. You got to get lucky to see this off one sweep. Okay, one sweep, you're likely not going to see a rally like this, especially in ETFs. But when they come one after the other, you can't miss that type of action. And all you guys know, again, private Twitter in the room, you know what I'm talking about. It was like an Uzi. It was nonstop. And, this is nine and a half out of 10 times, this is what it leads to on an intraday basis. Okay, so you want to try, if you're day trading, you want to try to get in the middle of that as early as possible and then raise stops, take some profit, the whole 9 yards as we go higher. You don't obviously want to come all the way up here and say, okay, I'm convinced now. Pretty early on, you can get a read on these things and you get a feel. You see 1, 2, 3, 5 sweepers start to hit it up. You want to get in the middle of that to try to trade off that momentum. All right. But they did get hot late Friday afternoon. So that's the FX high here. September's the best of the action. They dabbled in next week. Here is the EEM action. That's not next week. That's the end of the month. This is next week. All right. These, again, majority sweeper activity. And that can create momentum because the EEM catches size blocks in its sleep. Every day there's a 50,000, 80,000 contract block on the call or put side in the EM. It's a monster. All right, but again, the sweepers can create momentum and possibly light a match for a squeeze here. So you got a couple different lines next week, the week after. You can see on the bottom there the total action there. All right, and this one I thought was the most interesting of them all, just because like FXI and EEM always catches action. This thing doesn't catch action. This thing used to catch a lot of action when China was hot, and they used to knock the ball out of the park in this thing. I think this is a China ag play, if I'm not mistaken, ETF. But this thing I know well, it used to catch a lot of action when those Chinese markets caught fire. All right, and you could see I just randomly grabbed some of the top size sweeps there Friday afternoon. Here's the time here if you want to get an idea: 1411, 1447, see 1512. Like, look at the times of these sweeps. That's what I'm talking about that aggressive Uzi type action. Where's, you see here? 1411, 14. They're not in chronological order here, but you could get the idea. 1512. So that's an hour. That these things got swept up. Let me get that off there. Okay. And like I said, 57.40 spec action, right? 24 cents they started paying, 27 cents up to 31 cents. It's machine-like, algo-like. All right, and the total damage you could see on the bottom here, 8,300 of the SEP 26 calls. They bought some of the 25s and very little of the Jan 27s on the bottom there. And this is what she looks like here. Oh, this is the afternoon. All right, so you can see here, you can see the volume spike there when they started sweeping. Okay, let me go to a daily so you guys can see. Where the hell's the daily on here? Oh, maybe I gotta go out. Yep. Oh my God. These things have been hammered. See, look how hot this thing was. So you're talking about quite the beating. What price is that? Yeah, the 35s. This is anybody know this, by the way? This is an Chinese ag ETF, right? Anybody familiar with this? It's kind of funny. It's not ag? You sure about that? Wow. Oh, okay. Oh, here it says harvest too. Okay, I could be wrong. Regardless, broad-based index ETF, really? All right. So I know for sure it's China, right? It's definitely China. Let me make sure I have that right. Because, like I said, I'm very familiar with it. I've played it, believe it or not, a couple of times. In the past, years now. This thing's been around for a while. It's 3-time bullish for China. Are you sure about that? The CSI 300 index is designed to reflect the fluctuation in performance of the China A share market. Okay. Most liquid China stocks. Gotcha. All right. So you catch my drift anyway. All right. And again, you guys have probably a laundry list of Asia related names. I think even the names beaten down off tariffs. You probably want to make sure, see some flow in the group or around that name before you jump the gun, but definitely keep an eye on them. Like I said, I know Boeing. I don't think we saw any Boeing action, believe it or not, but I know Boeing participated in the rally, right? Kind of stalled out there after the move. Caterpillar did catch some algo activity, pretty similar there. All right, yeah, Baidu. Look at like even Baidu, this stock has looked gross, right? Ooh, what the hell kind of chart is that? Baidu's been catching a beating here. So it seems like it started to turn even before yesterday. Baidu actually caught a couple December sweeps that did look interesting out in December. Caught some smaller other stuff, but some legitimate December sweeps. There was one, I think, right around this 9 here. They totally got run over. And then we saw another one on Friday. So pretty much same vicinity stock wise. All right. I don't remember the exact strike they were playing. Down 10% year to date. Yeah, I mean, and Baba too. Baba's had a tough time, and Baba's been catching some size on the call side going into earnings. Could be earnings related. We have no way of knowing. They could be replacing equity into earnings. There's been a lot of that. But some big time sweeps on the equity side in Baba. You're not going to look at these things and think they look good. Okay. And you don't want to look at these things and think because you heard or saw a headline that means you should buy them. Okay. That's the total opposite of what you want to do. But what you want to see is you want to see sweepers be committed here. And without a doubt, these things could still go to zero, but there's a high probability of a decent sized squeeze. Okay. And that's the way you got to think of it. That's the way you got to think of it. So next week, okay, we go into the week. Let's say Monday, where we same old thing, we're flattish, market down a little bit. Baba, Baidu, FXI, they do their usual, they're a little red. And you see some sweeper activity start to come into these things again. You might have a trade opportunity there. Okay. Right now, there is not much better out there. There's not much better out there. We're not seeing any aggressive spec flow in anything. All the good looking flow out there has been January, February, leaps, all with time behind it. So, we talk about this a lot, guys. The trade is, you have to, for the short term trade, I'm talking now, you have to look for things that look disgusting, and they might be a momentum shift there for a trade. Because what are you going to do? What else are you going to do out there? Are you going to buy highs on something? You're going to buy the highs on something, and then they rotate out of it the next day? I think, right? Google. All you heard was, all right, Google, that's it. They're coming out of Facebook. They're going to go into Google. Yeah. You can see these things. The market is, whether it's finding resistance, it's scuffling a bit. And they're doing a great job of holding these indices together by constantly rotating each and every day. I think if you can, here's the way I look at it. And I know a lot of you maybe don't have the resources or can't be in front of a screen all day to take advantage of the day trade. Okay. I'm not stupid. I've been in the game a long, long time. I know the big money is made on the position side. Okay. I know the big money's made swing trading and taking decent sized positions. Okay. But you got to understand, there's a proper time to do that. You can't do that just whenever, each and every day. Anytime you see a name that you think can go higher, it may go higher for a day or two, but if you get caught in that pull and that rollover, it's game over, especially you option players out there. All right, but right now I think the quicker, the shorter you can be, the better off you will be. I think the opportunity of these things is day trade, so you don't have the overnight risk. And Friday is a perfect example, right? Let's say, again, I'm giving just an idea. Baidu, Monday, Tuesday is down a little bit, right? Down, had a nice rally, breathing a little bit. And then we see similar action come into the Asian names. You got a day trade opportunity there. Okay, you don't have to worry about that overnight risk. You don't have to worry about possibly Trump tweeting the total opposite the next day and these things coming in. All right, so you got to have an idea. You got to pick your poison here. You don't want to get stuck in between. I mean, excuse me. The way my approach, here's how I look at it. Okay, right now, any action, legitimate action that's coming into something off a pullback, I want to start building a position in with a decent amount of time in it. Example, EA. Okay, that's my only new swing so far, right? Legitimate swing. EA is something, the longer it hangs out down here, I want to end up with a decent full position in the name out in January. All right. The rallies, we were talking about this during the week in the webinar. Can these rallies be traded? Yeah. Okay. You could wait for exactly what happened here. They come in and start aggressively, or you see the Jan Sharpie pop his head up again, and you could get in for that quick trade, right? We've day traded EA off that Jan Sharpie, I think 4 times already. But if you want more than this move and you want it in weeklies, it's going to be tough. It's possible, but it's going to be tough. The odds are against you, and the flow is not providing an edge on those odds, because the flow, right, the flow that's got us excited is out in Jan strikes. And just use EA as an example the last go around. The last go around, it was even worse. You didn't even have those tradable rallies. There was just straight up selling in the damn thing back here. Right? It was back here, I think. Yep. So they started buying the EA over here, and this thing, continued to bleed. And then eventually found its footing. And were they August calls? I think did they just expire? Oh no, they were July's, I think. Whatever they were. But think about how much time they had. That was November. So if you got caught up looking at every tick and trying to catch the big move of Jan Sharpie action in August calls or August 24th weeklies, you need the horseshoe up your rear end. And now is a tough market for the horseshoe. All right, so if I could recommend an approach, that's the approach I would recommend right now until something gives here. And we could talk about what can give as we talk about sentiment and everything else, or just flow. We're just not seeing any good looking flow in shorter term stuff. A handful, J&J, okay? And honestly, J&J I wasn't doing cartwheels over that activity. It was spec action. But you had, off a pullback, a niner, you could have played that. And honestly, there are other names like the J&J flow that popped and just fell apart. And if you got stuck, they're done. The other one is this Teva we've been talking about. Had some nice flow. We were talking about that. Oh, the members only webinar. Remember off earnings? Caught nice action and has had nice action since. But there's just not too many. And the stuff that's strong right now, guys, you don't want to chase that. With this rotation going on, you don't want to chase it because they can rotate out of it and into this stuff at any given moment. At any given moment. And if you remember, we'll go into sentiment and we'll go take a look at where we're at now, where we were. If you look at things from the sentiment point of view of things, you see exactly how it all shakes out. The banks, they wanted nothing to do with them. Then the banks get too hot after this type of move, and now they're finding a little bit of a tough time. So they're always going to look ugly when we should start looking at them. We talk about that all the time. We talk about that all the time. All right, so we have the Asia tariff stuff to definitely keep on watch next week. Again, some of the action off that stuff was worth taking a shot on, at least participating on the day trade side, without a doubt. A lot of us did. But even if you wanted to take a shot on a swing, it was worth it off that aggressive activity. But I think it has the potential to turn into something bigger setup wise. And that's what I'm hoping for. I'm not just hoping for the quick squeeze off the momentum stuff. I'm hoping for a possible legitimate rotation into this stuff. And then you can see some upside like we saw in the staples. Same thing. Or the utilities. Now, we were talking, remember the utilities and staples? We were talking about that they're not ideal sectors, right, for us to be traders in. That's the problem. Yeah, we had the Campbell soup. Some people had a little Clorox and all that stuff. but it's not something you're really going to get excited about. You know, some of the calls aren't as liquid as you would like them, blah, blah, blah. But look how bad these utilities looked. You know, look how bad. What happened? Look how bad some of these things look. Yeah, XLP is the staples, MJ. Now, you want to look at staples now? All the flow came down here, all of it. There was so much flow, it was impossible to ignore. You think they might be getting started? That's the problem. You understand? They might be just getting started. They got started months ago. You just weren't paying attention to them. You know? That's what it is. Nobody wanted to pay attention to them. They looked awful. Look at them. They looked awful. Look at Clorox. You think they're just getting started? Look at this move off the lows. This thing caught sweeper size call spreads down here. Nobody even wanted to type in the ticker into their Quotron. Campbell's Soup. There's a ton of them. There's a ton of them. Yeah, MJ, again, you're going into that. Look at the monthly charts. The monthly charts, MJ, will do you no good. There could be a pullback on the monthly chart that looks, you won't even see it on your monthly chart. It will shake you out 6 times over. You know what I mean? I'm just being honest with you. You want to start looking when the flow just starts to move into these things. You want to at least have your eyeballs there, okay? If you, let's say, if you were to tell me on this Clorox, all right, you missed the action on the bottom, but this pullback here or this consolidation here, you like the action and you're going in there. I understand that. I understand that. But up here now, you know, these things are hot right now, overheated in a sense. I think they are overheated as a sector. All right, so we want to start looking where the money, when they start to take profits in these things, they're likely going to rotate into other stuff, just like we were talking about as a whole. See, and again, not to jump around, but this is what I mean about the basket of a market we're in, okay? Remember, MJ, we were talking about how sentiment was too hot on a lot of the growth tech sectors, all that jazz. Remember we were talking about it? We were using IQ as an example and all that stuff. Okay, you look at those names, they got destroyed, right? Right. It looked like they were never coming down. Exactly. But you look at the names, all those hot growth names got hit over the head. And then you pull up QQQ, you know, and it's like a rock up there. And I get it. I get it. You know, QQQ is not IQ. But, you know, I'm just giving an example of that. When you see sentiment hot in a particular sector, you know, sometimes you just got to apply logic. Look at the stuff that's hot, and that's what sentiment's telling you it's really hot. Okay? And the staples weren't hot. They were on the complete opposite side of the spectrum. Now the staples are hot. Okay? And you got some other stuff that's getting there. China, Asia, tariff stuff, they're there already. Okay, they're there already. So let's go on that. Let's go right to the other action. Like I said, guys, there hasn't been a lot of it. We've been bitching about it, excuse my French, for a while throughout the summer, but it's something we got to deal with. Here, you know, private Twitter in the room, I put the top bull bets on the day. Oh, that I didn't even mention that. Wynn and the casinos court action off that sweeper frenzy. It goes to show you why are the casinos getting destroyed. I'm sure there are people could come up with a ton of reasons on top of the China situation. But for me, Friday told me that it's all China, nothing else. Okay? Because when they were sweeping FXI, ASHR, you know what was the first name they swept? Win, actually, earlier in the day, and then LVS. Off the headline, there were algo sweepers in LVS off the China headline. Look, this is off the action here. Okay? What's that tell you? It's all China. So if they start covering shorts, right? If that whole tariff trade they've been shorting nonstop, chances are, these are going to be a big beneficiary. Whether they should be or not is irrelevant. And this LVS, by the way, was holding up well compared to the other ones. They got it. It was only a matter of time before they got it. Boom, look at this beatdown. Look at that massacre. Win's catching buyers. It's like nothing's hitting the tape. You had this little lift here, so I can't lie. You had a little lift off the action and then just fell apart. All right, but here's another name. You guys like to trade it, right? If they really start coming after this trade sweepers, Win can be a big beneficiary. All right, LVS Win. MLCO was another name. That's the old MPEL. You guys remember that? Look at this. Beating. A beating. Beating. So let's go to the other action. So definitely keep an eye on the casinos off that China flow. So Win, this was the block. There was a smaller sweep, but there's some December call spreads, all with decent time. The better looking action, but there's been some sweeper activity around it. This was a block, 878,000, December 155s. Okay, like I said, a lot of size out in December and a lot of size out in March, believe it or not. RL, this thing has seen some decent action. Here's another sweep, 300 gram plus. This is actually a good looking name. So you had this big move here, digesting that, and catching some nice action here. RL. Retail, by the way, okay, I know if you're members, you're probably, Jesus, shut up already with this, but it's just incredible. Remember how beaten down retail? They had these companies going out of business, these retailers. Every single day, Macy's, it would see some buying, the stock would pop for 3 seconds, whoop, a rash of selling coming in, knock it right back down. These things couldn't find a bid for the life of them. They had bankruptcy written all over them. They just assumed everyone's going bankrupt. And then before you know it, right, you take your eyeballs off it. I know I did, right? You start to ignore some of the action there because it's not getting that instant reaction that we want to see. And little by little, you start bottoming, a little rally, then a pullback, just in case you started looking at it. Now you're really going to ignore it. And little by little, you look at these retailers like, holy shit. And now they're scorched. Right? They go from nobody wanted them, now they're cooked. Well, they had a little pullback. They might not be as cooked. Where's the... So that's the RL. J&J extended now, but caught another decent looking sweep here. August 31st, 134 calls. Here was the secondary entry on J&J couple people in the room caught it. I'm kicking myself because I've been really selective on the swing side. But you had some action down here. You had a real nice rally, okay? And then it finally cooled off. Look how nice. Bink, niner, sweepers. That's all she wrote. You know, that's all she wrote. So, but now here, what are you going to do with it here? You need something similar again, but now you're talking about entry number 3 here. Well, possibly still has upside, so worth a look. But off 3 days of bink, 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 we don't want to look at that just yet. But another good looking order there, decent looking order. ETP, again, that's repeat activity. That's another example. All right, another example. I actually bought this thing. I was forced to buy it off the flow. They annihilated calls into the lows, right into the lows. This thing looked like complete death. I remember it like it was yesterday. I was cursing this thing out because I had a decent sized swing position. I was cursing this thing out even as it was going higher. I was cursing the stock out. That's how awful it looked. And then before you know it, now you look and look where she is. Amazing. So again, these are the top bets what did I do? Oh, these are the top bets I post in the room on private Twitter. They're not all playable. Obviously, there's some repeat action. These, in my opinion, were the best looking orders. Most of the time they're sweeps because I'm sweeper biased, but overall the best looking orders. All right, let's go into where's that thing I put with the sweepers? Oh, here. Here's some other sweeper activity on the day. Some of this stuff may not even be around in Open Interest Monday, but just so you get an idea, it could be in a name you like. You look for further action. GE caught a little bit of buying. NEM, Newmont Mining, that's been a dog with the gold miners. Gold, another menagerie. What else we got here? This FTI caught some action. They could be rolling out some of those August calls they had. FCX, Freeport, copper has been a disaster. FCX saw a little action late day with the China stuff. Twitter, some small action. Qualcomm had a little buying. Pretty small. You can see, look at this. 20 cents, a nickel, 18 cents, 17 cents, 9 cents. This is pathetic. Pathetic. You know, sweepers have been pretty pathetic. Then we got, here's some of the unusual activity. Noodles and DLS, I remember that, catching an unusual bet. Again, this is post-market stuff I post at the end of the trading day. So you get an idea where we're getting to sentiment next. Here is some of the, these are the sweepers. Again, I call them wise guy sweepers. These are the sweepers I pay attention to closely. No matter what size, I look for aggressive activity. I like to day trade off these guys, depending where the stock is, blah, blah, blah. All right. Some of these things turn into top bets. Some of them, I forget they even hit the tape the next day. But you can see here, GE, FTI, that's what I was talking about, rolling out of August calls, possibly. Replacing them. ETP, we spoke about, caught a couple bets. Citigroup, cheap sweep for the end of the month. Those of you on private Twitter, it's on private Twitter if you want to take a second look. Walmart, a little more action. Walmart, what a shame. Really nice action pre-earnings. You have to take the risk of earnings if you wanted to enjoy that. MT, couple steel names Now, I don't know how that fits into the equation, right? Think about this for a second. This is where you start paying attention to the news and you go insane. When this tariff stuff started up, remember how the steel names were the beneficiaries of that? Remember X? Like everybody was buying X because of the tariffs. Now, X has been a disaster, right? A complete disaster. And now it's catching action because of the tariffs possibly coming to an end, some sort of agreement. Go figure. But I like it a lot better here than where it was catching action off the tariff news. So you could keep an eye on the steel names. Nucor caught some small action. Look at that. MT. Again, these are all names you can keep on watch. Next week on. See if they find a rally. And I don't know, Steel Dynamics, but Steel Dynamics is the steel name. I don't know if that caught action. It might have caught a small sweep. They all look the same. So that MT and Citigroup, some more cheap action there. MDRX, some cheap sweeper activity. It's a healthcare related name. Micron, a little bit of action. Micron always catches action, but a little bit of action Friday. No Tepper missiles, but some sweeper activity and a smaller risk reversal. September. They sold some puts, bought some calls. So you could watch that as well. Be nice if Tepper comes in and sweeps and does some damage there. That's usually kind of a spot, right? That he likes to do it. This was the last time he hit it. So always got to keep an eye out for those Tepper sweeps in Micron. Yeah, small risk reversals, September's. Let me get it for you. I'll show you guys. Now, small for Micron. Now, Micron catches call buying like it's nothing. Oh, shit. What did I do? I hit tweet like an idiot. Where is it? September. This is it. So he sold the 42 puts and 49 calls he bought with it. So sold the 42 puts, stock is 47-ish, and bought the 49 calls. Now, again, worth keeping an eye on, like the rest of them. Again, I don't know if the tariffs are the reason Micron's down. The semis have been a disaster. I'm sure China has a lot to do with what the semis are doing right now. They've looked awful. So you could keep an eye there. Oh, here's another name. I didn't buy it like a jackass. PM. Ooh. See, and I'm telling you from experience, I've been watching these things too long. Even for myself, I can't get myself to buy these things when I need to. But that's why those of you in the room, I stress this all the time. There's no reason, and you guys know this already who've been there. That's why I don't give my stock picks. I don't preach tailing my action, try to mirror me. That's all bullshit, okay? My job is to tell you what action is legit and what isn't. That's how I look at everything I do in the steam room. Okay. So regardless, whether I buy PM or not, I will stress to you that the action there is legitimate buying. It's real buying. Okay. Because so many times I kick myself in the rear end because I'm too conservative on a swing trade basis. All right. But this PM, as you guys know, caught a lot of action. Who the hell wants to buy? This is Philip Morris, right? Look at this. Ugh. And they nailed the lows. Here, I think even Dr. J pumped it. Goes to show you how strong it is. They pumped it and not even a shakeout since. So caught some more activity, a little bit more of activity on Friday PM. Here's J&J again. Twitter, a little bit of action in Twitter. Avgo caught a sweep. There it is down there for next week. I don't know if the Avgo report. I don't know if it's earnings related or what. Avgo September. Interesting. Thank you, Maria. So Maria's saying Avgo earnings in September. Wow. So they had, oh, so it wasn't earnings, Maria, that, what was this here? What was that news there? They hit the stock that clobbered an acquisition? Yeah, I think it was an acquisition, right? Take over a CA. They paid too much or something? Yeah. All right. I thought maybe it was China related or something. But here's the order for next week and decent size. So definitely worth taking a look at. You know, Avgo could get some nice sweepers from time to time. When that thing was hot, caught some big ones. This was only 96 grand, but keep an eye on it. You know, they're weeklies. Keep an eye on it next week, especially more action there. They played the 212 in the halves. Sweep, multiple exchanges, late day. Yeah, like I said, the size, you know, nothing to get too excited about, but worth keeping an eye on. Okay, so that's it for the wise guy sweeps. We went off Asia. What else was there? I think nothing else action wise. All right, so let's get into some of the sentiment stuff a second, and then I'll take your questions there. Because if I jump around, I forget what the hell I wanted to share with you guys. All right, so the squeezometer. Most of you know, if you're members, you know what it is. If you've been on these webinars, you're not a member, you still probably know what it is. If you're new, just simply put, it's a measure of what I feel is retail options activity. The beauty of this indicator is we get intraday readings on it. Okay, so not only does it give us a heads up on a possible squeeze intraday, but it'll give us a heads up on how sentiment may look at the end of the day. Okay, so I'll give you an example. Dow down 200, NASDAQ selling, things look weak, but maybe, you know, sentiment, they're looking to buy the dip. Okay, I'm not going to know that until at the end of the day without this. Okay, so what we like to use this as is a compass on, I feel more importantly, entries and when we may want to take some risk off the table, but more importantly, not chase. Okay, so what we had was we had off the recent selling, we got pretty low, but never quite got into the green technically. But again, under neutral, pretty low. And like it does a lot of times, led to a decent squeeze. Okay. So I like to use SPY with it, especially in this type of market. All right. So I'm talking about this here. We got down, I think it was 29 was the low. I don't remember exactly. 29 on this. So that would be over here somewhere. All right, 25. Yeah, again, they're numbers. So you want to use it as a reference. So we got pretty low, and we had a nice little squeeze off it. Okay, here is more importantly, where are we now? Right here. Okay, so we're not too hot. That's another reason why I like it. You know, we had a nice little snapback rally here, but because of what's probably happening under the hood in FANG, in some riffraff favorite names, sentiment not as hot as you may think it would have been. All right, so we're over here. I'll get to the overall stuff. Here's a simple NASDAQ put the call. I think you guys can make it out. I tried to crop it to blow it up and saturate the color so you can make it out. This is a NASDAQ put the call, okay? And I like to look at this on an intraday basis as well at times, especially in this type of market. Because like I said, you know, the tech names, they have underperformed here. Usually they were doing the outperforming, they were underperforming. And a couple times here, this, hold on, let me highlight it. This spike here, okay, and this here, was this Friday? This was Friday. This was elevated intraday and then closed down here, okay? But this was a decent sized spike on Friday. You had a little squeeze there, you know, and you can see if you go back, a lot of times you'll get squeezes and you'll get rallies or spikes. This was a spike, you know, these down here were spikes at the lows. So again, I just like to use this when there's a big disparity between tech and the rest of this stuff. But that's a NASDAQ put the call. Sometimes, you know, you guys, I don't even have it on here because we don't need to look at that individually. But here's where we closed. All right, because we rallied off the lows there. Didn't I put, hold on. Oh, shoot. Let me just put this on here. I didn't even post it on there. I forgot. Hold on. I just want to, nothing really to, hang on. Oh, you know what I'll talk about when I'm doing this? Hold on. Here's the daily sentiment index. This is more intermediate term, I guess I would say. Definitely not too short term, but intermediate term. What the hell did I do with the, oh, here it is, okay. So a lot of you guys have heard of this, and where are we? Here. S&P 70, we were as high as 85. I think NASDAQ was as high as 90 before the recent pullback. So 70, 68 there. All right, the cool thing about this, it measures everything. Crude over here, 65. So to read this, it's pretty easy. Percentage bulls, okay? That's what it measures. So the S&P 500, 70% bullish, right? So anything 85 and above, that's when you want to start paying attention to. Anything 15 and below, that's when you want to start paying attention to. All right. The rest you just want to use as a reference, you know, how far it's come in and stuff like that. So again, we had the NASDAQ was cooked. This recent pullback has helped that out. We've come down, I think, from 90 to 68 where we are now, off the lowest level of recent, 70. Couple other things that are interesting. Where is the see some of that gold we already know. This thing just can't catch a bid. This has been red, you could see here across the board for a while. It's amazing how there hasn't been a sentiment rally yet in gold. You know, gold's a little different than equities, stocks, and stuff like that. You know what I mean? It's different. So a lot of people use sentiment with it though, and you're washed out completely. Silver, obviously, platinum, copper. You got a 19 there. I think it was lower than that. A little bit lower. Yeah, here, 13. Coffee. Can you believe this? Nobody wants to buy coffee. I'm ready to load up. I'm a big coffee drinker. Cotton, Q-tips. Here's the Nikkei down here, 59 on the Nikkei. So that's cooled off a significant amount. Where's the dollar? Oh, here it is. 81. And you got T-bonds, T-notes. All right. Again, on private Twitter, no, I don't trade the other stuff. I just like looking at it. I just like looking at it. But it's on private Twitter, and I'll post it on my regular Twitter as well for anybody who wants to take a further look at that. All right. And this is the stuff I look at religiously. Oops. All right. So the squeezometer we went over, right? Neutral. Short-term trader sentiment, you guys have seen that. That is pretty much the squeezometer, but it's an end-of-day reading. Sometimes a little off, not exacts. Okay. Similar to the squeezometer on the recent pullback, we got really close to a bullish signal. Just missed it, but pretty close. We're back at neutral. NASDAQ sentiment, neutral, a little better than the overall sentiment because of the weakness in NASDAQ. Equity put the call, not a bad number. You know, it's considered neutral, but any higher than this would be nice. So that goes to tell us, you know, weakness, we're not too far away from reeling in some bears. Total put the call, I don't look. So these are the ones, as you guys know, these are the ones I look at religiously. You know, that's my map, my roadmap there. So we got total put the call neutral. NASDAQ put the call, I just showed you guys. VIX gives us an idea of short-term VIX buying. Neutral, that had a spike recently. VXN, that's the NASDAQ volatility that had a spike recently. DSI, NDSI, that's that daily sentiment index I just showed you guys. 70% bulls, 65% bulls. TWEEP, panic attack, as a measure of Twitter sentiment. You got no signal there, so the tweeps are not suicidal. When they're suicidal, we like to back up the truck. Weekly riffraff put buying, that comes out once a week. That didn't update yet. Option buyer sentiment gauge, neutral. These are more of intermediate time frames. AIM, you guys know, have seen it, heard of it. We had a bullish signal throughout. We're pretty much neutral now. All right. Fear greed index was actually greedy, okay, not too long ago. Now a little bit above neutral, but not in caution zone, and dumb money neutral. So basically you could see everything neutral here, especially on the intermediate side. So nothing to really focus on. All right. These things move around a lot quicker than the others. Obviously, they're short-term readings. All right. So, you know, these things we can a little pull back next week, and these things can be set up again. And just again, as a reminder, you use it just as an overall gauge on what you're trading out there. Okay. If you're in names that have run dramatically, okay, and you see these things start to light up red, that they're too bullish, all right, it doesn't mean the market's going to crash, but it just means that some of the hot stuff out there needs to cool off. They're just, the buying there is getting too sloppy. It's getting too sloppy on the retail end. And usually when you see that, you see a wash. Okay. And on the opposite, depending on how aggressive you want to be, is how you approach these things. Okay. If you, for example, if you want to be super aggressive, okay, if you really want to be aggressive, all right, maybe you're playing smaller size, you want to be aggressive, you're tighter on your stuff, whatever the case may be. If you want to take a more aggressive approach, you don't need this to get deep into the green, right? You don't need this technically to get into the green. If you see this thing in the low 30s or upper 20s, and you were looking to get long, you've been waiting to get long something for a trade, right? You like the setups out there, you're looking at technicals, you like what you see, that's the time to start looking. That's basically what this tells us. Too many people get all, wrapped up into buy, sell signals on everything. And again, don't get me wrong. You could be the total opposite. All right. So let's say you want to be super conservative here, right? Let's say you want to be super conservative. Then, because you don't like the market setup out there, you don't like, not too many names are set up out there, you just want to play the ETFs or whatever the case, then maybe you want to wait for a little green. Okay. So depending on the environment that you're in, depending on how much risk you want to put on, how aggressive you want to be, all these things matter. That's why nobody, not me, not Lucci, not anybody on Twitter, can tell you exactly what to do, in what name, when to buy it, when to sell it, right? Because we know nothing about your bankroll, your risk parameters, how aggressive, how conservative you are. These are the decisions you're going to have to make no matter what. No one is going to be able to take you by the hand and yank you into a particular direction. All right. So like I said, if you're looking to be aggressive, all right, anything in the low 30s, you want to start looking for an entry. All right. So we got that. What else is there? That's it, right? Yeah, I think that's it. I'll get to some of your questions. Like I said, this is all on private Twitter for you members. I'll post some of the stuff on my personal Twitter so you guys could take a look at, and we'll go from there. Anybody have any questions on this stuff too? Throw it out there. I know it can get confusing at times, but trust me, if I'm doing it, I keep things pretty simple. It's not that confusing. If you have any questions on the flow stuff, it's your best route is this. You go to wallstreetjesus.com, you click on strategy. They're very easy reads, short write-ups. It tells you everything from why sweeps, what are sweeps, how we trade them, how can you trade them, what to look for, how to use them for sentiment reasons, the whole 9 yards. All right. So whether you're a member or not, if you're interested in this stuff, it's pretty easy to, all right, Ranchero, be good, buddy. It's pretty easy to run through this stuff. Pablo's saying, do you trade the ETF sweeps and blocks? That's a good question, Pablo. Here's the thing. I don't like trading off ETF sweeps and blocks the majority of time. All right, because they're ETFs, and ETFs are used for hedging more than not, right? A lot of people use it for hedging. So in other words, if I want to buy Apple, if I'm long Apple equity stock, okay, but I'm nervous about the market, I'll buy QQQ puts to hedge, right? So you see how that can be confusing. So that's why I pay attention to the ETF side always, okay? But I like to put the pieces of the puzzle together. You know what I mean? I try to put the whole story together. Like the example I was showing you early on with the China related ETFs. Okay. I've seen China related ETF action many times. Many times I just ignore it. But off Friday's action, okay, when I put the pieces of the puzzle together with the rest of the flow and sentiment together, there's an interesting potential setup there. All right. So that's, again, I don't, and nobody should ever use this stuff as buy and sell signals. They're not, you're wasting your time. You're not getting the full use at a flow if you're doing that. Okay. Flow tells a story. And it's not too difficult to interpret what's going on. You see patterns. You know what I'm saying? You see patterns. Like, for example, again, the most recent one, because it's the only one, but you got that EA, and it's pretty obvious that there is a Sharpie out there making a bet on EA out in January. There's no doubt about it. Okay? It's got nothing to do whether he's going to be right or wrong. We hear all the time some of the sharpest guys out there are wrong, right? Guys like Tepper are wrong. But, again, the retail trader fails to acknowledge that there's no such thing as always being right in this game. No matter how smart you are, no matter what algo you formed. So I think that's the beauty of flow. You see people how they react off insider buying. You see how people get excited when they hear that David Tepper upped his stake in Micron. If you pay attention to the flow, okay, a lot of times you will see that happen in real time. All that other stuff is not real time. All that other stuff is not real time. We knew when it was going on that sharp players, funds, institutions were buying Campbell's soup. There was no doubt about it. And it had nothing to do whether they were going to be right or wrong. But it was pretty obvious that somebody was making a huge bet out there on Campbell's soup out in November strikes. Okay? That's where the edge is off flow. It's not about the one order in SPY. You know what I mean? Or the one buyer, $50,000 sweep in Micron. You got to understand this. There's call buying and put buying all day, every day in the options market. 99% of it is useless. It's the 1% when you start to detect a pattern of buying. And, again, you will see how they buy, what type of orders, right? They're sweeping, they're size bull combos, they're selling puts. That's sharp money. That's not retail money. A retail player's not selling EA puts to buy $1 million worth of call spreads. That's a legitimate player. Okay. And it's got nothing to do with him being right or wrong. But I'll tell you what, if David Tepper was your uncle or your neighbor, every time a stock symbol came out of his mouth, you would buy it. No? Every time. And you know what? Not every time he gave you a tip are you going to cash a ticket. It's just not going to happen. There will be losers, but why do you play them all anyway? Because if you play just those names that Tepper's spitting out at you, there's a good chance you're going to end up with a decent sized winner. And that's the way you got to look at this stuff. So to answer your question, the individual flow that circulates in ETFs, no, a lot of times I see it, I acknowledge it. If I don't see a pattern there, I forget it even happened. All right, so that's what I would pay attention to, especially if you're looking to develop a strategy. If you're a swing trader and you're looking to develop a strategy for some consistency, that's what I would pay attention to. And if you're in the room, which Pablo you are, pay attention to my interpretation of the flow, my explanation of the flow, because nobody expects you to be able to interpret this stuff as well as I do, and I've been doing it for a gazillion years. But by listening to me explain, by answering questions, trust me, it doesn't take that long. It doesn't take that long, and then you will learn for certain things you want to look for in the flow. Like I said, sometimes I'll see something in the flow, and I mentioned it earlier. My job is just to share with you guys that it's legitimate buying, whether I like it or not. Okay? There is a decent sized player out there buying PM. All right? Maybe I can't get excited about the name, but again, there's somebody out there buying PM. You may like the stock. So that would be the easier way, ask questions and just pay attention to what I'm talking about. That's why I'm on the mic all day. That's why I'm on the mic all day. Here we are. What other questions we got here? Take Two. Yeah, Take Two was in that EA category. Take Two actually before the EA action was the best flow of the bunch. And then you had earnings here, big jump on earnings. Probably a spot to, if you're interested, start looking at the name again. You're still up from the pre-earnings mark, but if you're interested, it's been the best of the gamers. MJ, what are you saying? I know we detect risk reversal, credits present in the flow deficit. Have you ever seen straddle strangles? Yeah. I see straddle strangles. Why? You want me to start mentioning straddle strangles? Yeah. You know what I do, MJ? You probably don't see it. I've been doing it on my regular Twitter, and I'll start throwing it every day if you want on the private Twitter. I put the top combos on the day at the end of the day, and a lot of times straddles are there. All right, so what I'll do is I'll start posting it more if you're interested. Not too many people are. That's why, Yeah, you'll see. They're strangles, straddles. A lot of times they're tied to stock. That's the problem. You know what I mean? A lot of times they're tied to stock, these things. Yeah, that's the problem. I'll show you, though. I'll post Fridays, and I'll give you a heads up, MJ. You can take a peek. All right? And I'll show you. Darmish is talking STZ. STZ did see some buying. Tried to bottom out Friday, had a nice reversal. I know a couple of you guys in the room were talking about it. Definitely, want to keep an eye on down here now. I would want to see a look. In other words, I want to see them come back again. Not to sound like a broken record. I want to see them continue to hit it down here. Remember the last time they did it? You guys remember STZ. That was here. The STZ was one of the names they hit in the Fed panic attack. One of the first names. Right here, literally. I had a nice move. So, but you remember the action there? Millions of dollars. Yeah, it was down on that marijuana acquisition, right? Yeah, it was down on the marijuana acquisition of that marijuana company they've been talking about. They made a big bet. Yeah, CGC, that's it. They made a big bet on getting into that space. They think a lot of companies are going to start to follow now because they don't want STZ being the only player there. Crazy how big weed got, huh? Nuts. What else we got? If it's not too big of a pain in the rear end, throw the questions back out because I'm scrolling back. A lot of people are just putting symbols there, and I may not see it. What's this here? Let me see. Oop. Steven saying I just looked at LVS revenue. They get APX 10% from US, 60% from Macau. Wow. So there you go. It's the Macau thing. It's the Macau thing. They look, how good do these casinos look, right? They look so strong. That gambling approval, all that stuff. And then they just destroyed these things. Destroyed them. Now they look awful. Yep. Merck. Yeah, Merck. Well, I don't short, but Merck has gotten crazy here. So I get it. What you're talking about, overheated. And to be honest, Merck had flow, but nothing spectacular. It had some buying, some sweeper activity. But yeah, I definitely wouldn't buy it. I definitely wouldn't buy it. Like the J&J still looks good, in the long run. Just here, there might be more upside, but eventually you can see some breather here, you would think. Even though this shit's not showing it too hot at all. Anyway, this is J&J. UPS somebody's talking about. Yeah, that's another one. So a little bit of action did nothing. Well, she's looking better. UPS, some action. It does look interesting though. There hasn't like I know guys, it gets annoying, but there hasn't been that great a flow out there. And it's probably the summer, It's probably the summer. But UPS caught some activity, been bouncing around. It does look interesting though. We were talking that we wanted to see UPS catch the action down here. That would have been a better spot. Up here, this is what happens. This is what happens. This is when I talk about the spot. Doesn't always happen, but this is what usually happens. It just becomes tougher because it's already been a decent move. You got the other stuff too. Speaking of hot stuff, good looking stuff. The rails have been ridiculous. This KSU, nice breather here. This has been a tough stock too. Tough stock. But there's been some size buying, had a big move, and now you can see breathing it out. CSX, always the first one to see action in that space. So pre-earnings, that's over here. And, now it just seems like it's up every day, this CSX. Look quietly, without even anybody realizing, including myself. Whew. But yeah, KSU, a name to keep an eye on. I know Steven, you guys know Steven in the room. He's got an eyeball on this stock. It's been a tough stock, though. It's been real tough. You can see Chop City here, but maybe finally getting out, right? What's the weekly look like? Maybe finally getting out of that consolidation. MJ, where are you? You like the black background better? I tested out the black background to the white. Is it more? No, huh? I'm trying to see what's more visible for you guys on the screen. That's why. All right, so the rails, WD, I haven't seen action in WD. No, that's me. You like the white background? I'm going to change it back then. I just thought maybe it'd be more visible. I'm not too crazy about it either. Workday, this is a daily, right? Looks like it ran through this niner here, but this is a little stretch for me. It does look good. This is software, right? What's the beast doing? CRM. She's still looking good. Yeah, AMD, incredible. That's all I could say. The action there has been incredible. How much left it has upside, who knows? But it's been incredible. Oh, HAL. I got a little position in that HAL too. I don't think I'm going to add to it like I am the EA, but just because it's HAL, Bill. But I would just, you're in Jans, hopefully. The Jans or the Febs, nothing shorter than that, I hope. I honestly, if listen, if there's something else that you see eventually and you want to put your money in something better than HAL, I get it. Okay. But if you're okay with leaving it alone, I would leave it alone if you're in Jan. Because again, the reason why you're buying it has nothing to do with what the stock is doing now, Bill. I got to remind myself of that too a lot of times. If you felt, or if the flow felt that there wasn't going to be further selling, the potential further selling, they wouldn't go out to Jan. They go out to Jan for a reason. You know what I mean? They go out to Jan for a reason. So you gotta prepare yourself. See, like a HAL, if it was any other name, this is something you want to look to add to. The reason I don't like HAL is it catches a ton of action. There's so many hands in it. So the action we're seeing in HAL, if it was any other name, it looks like crazy action. But in HAL, it's just decent action. It's kind of like what's in the AAL, American Airline, Chevron, those type of names. There's just a lot of action in these names. So when you see 10,000 contracts in HAL, that's not that big of a deal. That's the problem. Yeah, they may come back again. So that if you're looking to add to it, that's something you would look for there. More than likely, they're going to come back. I would think there was a decent amount of Jan flow. So it's definitely something they could come back for. Yeah, and listen, I've seen these energy names too many times. There's a lot of pain, but sometimes if you have the patience, I'll give you an example. This is one of the names I like a little bit better than a HAL, the Hess. Okay. They did the same thing in Hess. All right. They were buying Jan calls forever, constantly. The stock just did nothing, couldn't find a bid, went lower. It actually took quite the beating after the flow. Where was it? I'm trying to find it here. I think it might have been here. What's the date on that? I think it might have been around here. Okay. So you could see like HAL was bouncing around here and then did this after it. So think about that pain on top of it. And then look what it did. Look what it does. Look what it did after. So when you're buying blood and you're buying stuff with time, you want to prepare yourself for this. If it doesn't happen, great. But you want to prepare yourself for this. You want to be able to add at least once into this, and then just ignore the price action over the short term. Because it means nothing, right? A lot of us, like when we're buying Jans, we're looking at it like we're in weeklies. And you know why? Because sometimes you get lucky and off flow out 6 months, the stock could just catch fire off some news or something immediately. Sometimes the market just going higher. It's just the way the game is. Like FDC. FDC, when they started buying FDC, there was a lot of pain there, Bill. I don't think you remember that. Or maybe you weren't around for it. When the initial action in FDC, they went out a year, okay, the stock did nothing. Ask Steven about it in the room. He knows exactly what I'm talking about. And then when we played it recently, that wasn't the initial activity. That was a secondary entry. And then it took off from there. What a beast. You see this beast? And by the way, here, the secondary news, oh my God, secondary. They were selling puts. Look at it. Will. Yeah, I don't know. Bill, William, I never know. I got a guy I used to work with, William. That's all he wanted me to call him William all the time. I got a good friend of mine. I call him Billy. You guys confuse me. I'll come up with a nickname like I call MJ Degenerate. I'll find one for you. Maybe I'll just call you Struck. But yeah, so that's, you want to try to avoid getting in the habit when you're buying stuff with time, especially blood. Don't get antsy. Don't treat it like you're in front month. It becomes a big problem, If you're not comfortable, and I'm not saying you in particular, I'm talking about in general, if you're not comfortable, then you just, buying blood is not for you. And I'm talking to everybody out there. You know, if you're not comfortable, then that game is not yours. But, you know, there's a lot of money to be made in that game. Campbell Soup, did you own that, Will? Did you own CPB? You know, that wasn't easy initially. You know, we did. I don't remember, but you guys know Campbell's Soup. You know, there was some weakness and choppiness. Not that long, but it wasn't easy. ETP, I know you own that. That actually, you know, didn't get really rocking, but started grinding higher. So they're all different. You know, ETP, they were buying, I remember, into this big sell, right? Or maybe actually they started here. So again, the way we got to look at it, okay, the best approach to take with this. That's why maybe you want, so I know people who do not like to jump the gun and buy when they see that type of action. They like to play it out, but they risk missing a name like this, another name I didn't play. All right. This is what can happen if you don't jump the gun with at least an initial piece. But, you know, the people I know are willing to risk missing this for taking their time. So if they see a name like EA catch action and it's out with time, they will allow it to find the bottom first, potentially, before they jump in. Because they're not interested in the trade. You understand? You're not buying, again, if you're buying EA for a trade, you were buying off those smaller spec sweeps and you got the rip to sell into. Okay? If you didn't, you had the wrong approach. You wanted the big move in the trade strike, and you're not going to get that. You're not going to get that. But the outlook to have on these things is you almost want to see this thing do nothing and build a position in it. And that's not an easy thing to do. You know, you want this thing to linger down here. You want it to shake out people. You want it to look awful. You want it to draw in more shorts. Because you're not worried about the next couple days, the next couple weeks. You're holding bigger picture, right? So that's what I'm saying. EA, okay, I day traded it. I traded it off some of the action we saw. I didn't sell not one contract of my Jans. They were profitable, nicely profitable, because that's not my approach. I'm buying this EA pull off the Sharpie action for something more than just a trade. You know, if it was just a trade, I would have flipped it like I do everything else. Does that make sense? You know, it's easier said than done, but that's why it's important. You've heard me say this numerous times, at least for me it is, having an idea of what's your game plan before you even start pushing buttons. You know, what are you going to do? What's your game plan with this EA? Are you buying it for the big move of Sharpies? Are you making a bet on him? Or are you playing the momentum? You can't do that on the fly. You can't do it. You know, you can't say, all right, I'm trading off the momentum in August calls, but now I'm going for the big one while it's moving. Yeah, but I'm not just saying if you bought Jans, okay, more than likely you did that to make a play on the Sharpie. All right. Everything we see over the short term, ping pong in here, going lower, rallying up to here, that means nothing. That means nothing. And trust me, I'm telling you from experience, because if we start selling these little rallies and our game plan was for something bigger, you know, the risk reward, it's not worth it. It's not worth it. You don't need to buy blood to do that. You know, you don't need to buy blood to do that. Like right now, my two full positions, EA, I got room actually to add, so I'm going to be adding there. I'm on a full position. My other one's PAGS. It looks awful. Okay. And PAGS, I actually even traded it aside from my Novembers. Right? You could day trade it. You could swing trade it. There was some August calls. A lot of you in the room, you guys traded it. Right? You guys got out of it on that rip. You look like geniuses. I didn't sell any of my Novembers. You know, back here, not that this rip is where you guys, a lot of you guys traded it. Here, I traded it, but that was a trade. You know what I mean? I had a different game plan for that. My Novembers, you know, I was looking to take a position in this vicinity. And, you know, I got even less time than the EA, but I'm looking for more than this. You know, I'm looking for a decent profit here if I could get it. You know, so, and big picture wise, the name of the game is that even if EA doesn't work out or PAGS doesn't work out, okay, if you took that approach with PayPal, you got paid. Okay, if you took that approach with Campbell Soup, you got paid. You know, if you took that approach with FDC, you got paid. Okay, and at the end of the day, if you play all the Sharpie action with time the same way, when it's all said and done, you're going to have some big winners, you're going to have losers, you subtract the losers from the winners, and you should have a worthwhile profit there. If you don't, then buying blood is not for you. And you know what I mean? You got to make that decision. But you can't randomly just, you know, on the fly. All right, Sharpie action FDC. I'm gonna buy some Jans. Oh, I'm gonna flip these Jans now. You know, and then you go into EA. Oh, I'm gonna milk this one. I'm not gonna flip it. There's no rhyme or reason. There's no game plan there. MJ, I don't pick on you, but you're notorious for that. You're notorious for that. You know what I mean? Like if I were MJ, for the style that you like to trade, I would never buy the blood for anything more than the quick trade. You understand? Never. Yes, there you go. EA is your example, right? I'm sure you had a decent profit for a trade. I'm sure you were up trade-worthy profit on this EA. And now, you're caught in a little more selling. You're probably not in Jans. So this EA can be at $500 by Christmas, and you might end up having a loser on your hands. So, I tell you this constantly, MJ, and it's not just you. A lot of people fit into that category. You gotta have an idea of what you do well, what you feel comfortable doing, and you gotta stick to just that. You gotta stick to just that. Yeah, you gotta have some sort of game plan. Like, you see me, you guys laugh at me, right? I know in a joking manner, but I gotta keep it. I'm day trading or I'm swing trading, position trading off Sharpie blood buying for the most part. Okay. But my swing positions for the most part are going to come off the sharpest activity. And I'm going to day trade everything else. Okay. I can't start swinging everything. I'll end up like a chicken without a head out there. You understand? I can't. That's why you guys are like, oh, did you swing? No, I can't swing that. I can't start swinging August calls. I won't have a clue what the hell I'm doing. But I'm content. I know I'm not going to make as much money day trading, but I have a lot less risk, and I'm willing to take more risk on the sharp activity with time because the reward is worth it. My risk reward is worth it. You understand? So I'm comfortable day trading. I'm comfortable with the risk reward, and swing trading, position trading off the Sharpie activity with time. I'm comfortable with the risk reward. If you're not looking at it that way, you're going to have headaches. If you're laying juice in calls with time and you're just trading them, that's an awful risk reward. No? Think about that. That's an awful risk reward. Yeah, Stephen, 100%. Who knows if it's that? We joke around about that all the time, but I mean, that's probably one of the reasons. Yeah, you had CNBC doing cartwheels over EA. We saw that with Disney. Remember? Remember what they did with Disney? But Stephen, you got to understand. Again, what you're doing, that may work for you. For me, that's a disaster. Okay? Because once I get out of my EA, the likelihood of me getting back in, exactly. You understand? Trust me, I've been there, I've done that. Exactly. You say rarely, I never get back in. You hit the nail on the head. When I'm all out, I'm a fill or kill type guy, I'm either all in, all out. That's why I've sucked with, tapering out of position and selling in intervals. I'm awful with that. Yeah, I've seen you do it. You do it time to time. You're better at it than I am. I can't do it. Maybe it's just to keep it simple type thing where I don't have to think as much. Therefore, I'm not putting in as much emotion into it. Maybe that's behind it all for me. But for me, I have to make the determination early, I'm in and I'm going to be in until they pay me nice. Otherwise, I got a loser on my hands. Because here's the problem too, Stephen, okay? And you know me as a big sentiment guy, there will be a million reasons for me to sell this EA. I can tell you that right now. Oh, Nigerians pumped it on CNBC. I got to get the hell out. Oh, there's extreme bullish sentiment. I got to get the hell out. Oh my God, the Take-Two warned these things are getting killed. I got to get out. There's going to be a gazillion reasons where I'm going to get emotional and I'm going to end up just pulling the plug. So for me, it's keeping it nice and easy. Sharpie activity, I'm in the vicinity, boop. You know, I'm going to look to build a position into some weakness, don't chase any green, and I know what I'm looking for. I like to your style of trading. Currently, I'm reading a very good book of traders trading in the zone. Yeah, that's a popular book. That's a popular book, Khalid. Very popular book. I know traders swear if you're in this game and you don't read Trading in the Zone, a long time ago I read it. That's been around forever. But that is a great book and very popular book. Very popular. But yeah, it's we talk about this a lot. We can hold webinar upon webinar on this stuff. You gotta orchestrate some sort of game plan based off how you are wired emotionally that keeps you in check when you need to be in check. It gets you in the habit of doing things that you don't like. That's the problem in this game. Okay. So for me, I know when I'm buying like an EA and it looks good, I feel good, chances are I'm likely too early. If I'm buying EA for that bigger move, I almost got to force myself to buy, and that's when I'm doing the right thing. Same thing on the sell side. You almost got to force yourself to sell, whether you're right or wrong, and then you're doing the right thing. Because it's easy to buy EA up here with all the juice, all the good news, right? All the volume coming in, all the riffraff talking about how big of a winner it's going to be. It's easy to buy there. Easy. MJ saying, hello, I remember looking at Campbell's Soup, smugly thinking it was a shitty trade when you first bought it. MJ, I had to pull teeth to get myself to buy it. I'm not lying to you. Campbell's Soup. First of all, you're not even considering everything else. Campbell's Soup this whole way down saw nothing but put buying. I don't know if you remember that. Put sweeper, put sweeper, put sweeper. Me and Cash, Cash in the room, we were joking around. Like, oh my God, is Campbell's Soup going out of business? Nothing but put action this whole way down, okay? And then I was joking with Cash. I was like, this thing can't sell off on earnings. I remember they were coming out with earnings right here. You see it right here, okay? Gap down. And I was telling Cash, that's a guy in the room, by the way, there's no way this thing could sell off more on earnings. They didn't factor in all the negativity you're telling me. Look at this, okay? There still hasn't been call action. Nothing but put action, all right? Gap down, awful news, awful conference call, the whole 9 yards, okay? And what happens? We figure more put action is going to come in, snowball it, this thing's dead. The call buyers show up. Now think about that. Now call buying shows up, okay? Just at the worst point possible, call buyers show up. And we're like, all right, maybe it's a quick trade. Maybe you get a quick trade, a squeeze out of it. Then the November Sharpies started showing up in huge size. So now we're like, all right, oh shit, what the hell's going on here? All right, maybe a guy's bullish long term. The next day, more Novembers. The next day, more Novembers. The next day, November bull risky. The next day. And look what the stock is doing in the meantime. You think, oh, it's going higher, right? Intraday, it was popping. I remember day trading it. Intraday would pop off the action, but look what it did. Nothing. Okay? Then it starts rolling over, and the November guy continues to just come in. And that's when I said to myself, I got to add to this thing. I got to buy more. I got to build a position. But look how awful it looked. You think I enjoyed doing that? You think I wanted to buy that? Yeah, and you almost have to prepare yourself. It looked, even in, as I'm buying it, it looked awful. Like right here, you think, okay, it's finding a bottom, right? Lows, more, and look, drifting, 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 and then before you know it, so, but that's, that's this type of action. It's different, it's this type of action. Yeah, exactly. And IGT, well, IGT was different. I mean, I had a full position, so I took the lump like the full position. But IGT, there wasn't time behind it. You know what I mean? So that was a big problem. But you're right. The IGT is a loser, and the Campbell Soups, the FDCs, all that stuff, they make up for an IGT. You're going to have a loser, whether it was going to be IGT or something else. Going to have a loser. But yeah, IGT was definitely a full position loser for me. Whether the action was equivalent to Campbell Soup or not, what am I going to do? But that was the problem. I didn't have enough time there. I probably should have treated it a little different, but easy to say now, right? If IGT was rocking, I would have thought I was a guru. Yeah, Jan Danks actually, here's another name that catches a ton of action and is a real tough name. So it's hard to get a gauge on how bullish they may be because Jan Danks catches a lot of action. But there's definitely buying down here, Dharmesh. Definitely. So I would treat it as a trade and not, make the mistake like I kind of made with the IGT type thing. I would treat it as a trade. I wouldn't, not yet anyway, I wouldn't treat it as the Campbell Soup where if they buy more on the way down, add. I would be looking for a squeeze. Unless they really hit it hard, they can do that. We saw them do that once in the past, and had a real nice move. But the action so far hasn't been that type of action. It was Jan Danks. Where was it? You guys probably remember. I think it was over here last year somewhere, 2017. But it was at a pullback. Must have been here somewhere, or maybe it was over here. I don't remember. But anyway, that's, unless you want, Dharmesh, you can trade it and wait to see if they continue to come with size. Maybe you get a squeeze out of it in the meantime. Or if you're looking for that bigger move or better action, you got to wait. Let them convince you to buy it. You know what I mean? Let them convince you. Let them hit it again and hit it again and hit it again. And if they don't, you can't let it bother you, because if it runs, because that's not what you were looking for. The sound is breaking up. Is the sound breaking up, guys? No, nobody's saying the sound. Huh? All right, guys. Anybody else have any other names or anything like that? So we'll see. I got a feeling. Again, we were talking about this on Friday. I got a feeling there's going to be a huge uptick in action. Obviously, I don't know, bullish or bearish, but we're coming out of the summer. We're going into September, which could be a frightening month. At the least, we're going to see a better pace of action out there. The pace and the price action has been disgusting. You got a lot of key names that have just been, doing their thing, like Amazon and stuff like that. But underneath the hood, you got stuff just drifting lower and lower. We talked about the casinos, so many groups. So I'm honestly, if I was to guess, I think there's going to be money rotation into these things. I could be wrong. Maybe these things head lower. but it's hard for me to sit here and say that when the action picks up, the selling pressure is going to pick up in things like this. It's hard for me to see that without a legitimate squeeze first. SGMS, yeah, that's, you could put it in that group. I mean, they all look the same, man. They all look the same. They all look the same. SGMS, I wouldn't yet put it into that category of activity. You want to see more action there. But, if they squeeze, they can squeeze all these things. Like, look at this. Look at this. Caught action over here and found no bid so far. But they could have been early. I mean, you talk about buying blood. Similar to like a Baidu. See, they bought it over here and it just continued lower. A lot of things look like that. Could be the summer, so we might see a pickup off that. And I think the activity is going to improve too, hopefully. Micron, yeah, had some action. I would look for the missiles there, but definitely some bullish activity. We might see a continuation next week. September last year was one of the best months. Yeah. Well, last year, right. Last year was, that year as a whole was ridiculous. September is notorious to be a real pain in the rear end, though. But again, it's very possible they've already taken down so much stuff, Steven. No? I don't think they can treat them all the same way. That's my point. If some of the leaders, some of the bigger names that are doing well sell off, I have to believe money's going to rotate into some of these things. I have to. I have to keep reminding myself the rising rate environment is going to be a headwind. What about MJ if there is no rising rate environment? I wouldn't get all stuck up on that. What happens if they can't raise rates? You think if this economy starts to slow and there's some Turkey crisis or something, you think the Fed is just going to continue to, you know what I mean? It wouldn't shock me that we're not too far away from a rate cut at some point. I know it sounds ridiculous right now. Wait till the first so-called crisis pops up. And that's what they say they're doing, okay? They say that they're raising rates while they can. Okay, they could be toning it down a bit, but they want to leave the room just in case something pops up so they can cut them. So, well, no, I mean, now there's not, how could you consider a cut now? Not now. But it was in the first crisis, the first issue that pops up, MJ, that's it. You could take the rate increases and throw them out the window. Gone. Done. One little crisis. One little crisis. Like, put it this way. If China worsens from here, MJ, okay? If China gets worse from here, you could throw rate rises out the window. If it gets worse from here. So, it's easier said than done. Nothing stays the way it is. Things look great now economically. There's people saying underneath the hood, the economy already showing signs of slowing. You got the whole yield curve talk. That can change so quick. It's hard to see it now because it's been, we're coming off last year gangbuster, and the economy has been running on all cylinders. But the first hiccup, and that all goes whoop, out the window. All right, boys and girls, go enjoy your Saturday. All right, next week, hopefully we start to see a little pickup in activity, possibly some squeeze stuff out there we could take advantage of, some more blood buying because there's more blood. That would be a good thing. But for now, stay selective, nice and easy, and let the flow do the talking. All right. Again, just a reminder, those of you who are new, wallstreetjesus.com, the strategy section, and you get a lot of information there. All right, guys, thanks for coming by as always. All right, enjoy the weekend. Good luck next week.